We continue with cash settled share-based payments. These arise where a company grants share appreciation rights to employees as part of their payment package. The employees will become entitled to a future cash payment based on the increase in the entity's share price from a specified level over a specified period of time. The company should therefore recognize the services rendered by the employees and the related liability as the services are being rendered. The liability under a cash settled share-based payments must be recognized at fair value using an option pricing model, with all changes in fair value being recognized in profit or loss up to the date of settlement. Let's now see how this is done in practice with a practice question. We are required to show the expense and liability which will appear in the financial statement in each of the 3 years. On 1st January 20x4, an entity grants 100 cash appreciation rights to each of its 500 employees on conditions that the employees remain in its employment for the next 2 years. The SARs vest on 31st December 20x5 and may be exercised at any time up to 31st December x6. The fair value of each SAR at the grant date is $7.40. Like before, we start with the opening balance for the year, which is always 0. The liability brought down is 0. We do not know the profit and loss expense entries, or we compute the closing balance. Again, there are 500 employees, 50 leave, and 60 are estimated to leave. So 50 plus 60 gives us 110. So 500 minus 50 minus 60. Each one is entitled to 100. The fair value of the SARS at the end of the year is $8. Notice that for cash share appreciation rights, we use the fair value at the end of the year, whereas for equity settled, we use the fair value at grant date. Take note of that difference. This vests in 2 years, so 1 out of 2, the expense for this year, to give us a closing balance of 156,000. 156,000 minus 0 opening balance gives us the expense for the year 156. Our entry, we debit P&L, expense 156,000, credit liability in the balance sheet 156,000. Move to 20x5. The liability brought down, which is the closing balance for 20x5, 156,000. In 20x5 we had 50 leavers, then we had 100 employees exercising their rights, we had 300 SARS outstanding, so like before we compute the closing balance. Now since there were employees who exercised their rights, we need to pay out cash. So therefore the profit and loss expense as usual will be a balancing figure. We don't know that one. Then we'll say less cash paid on those who have exercised $100 exercised, each one receiving 100 SARS valued at the intrinsic value of 810. This would be in brackets, it's the cash which has been paid out.